SpaceX is about to do the biggest IPO in history, and it's apparently been Elon Musk's own personal piggy bank for 20 years, according to a New York Times investigation that just came out. The receipts show that he borrowed $500 million from SpaceX below market rate. He also used SpaceX to bail out his cousin's failing solar company by buying $255 million in debt that SpaceX's own rules prohibited. He's also having his companies all acquire each other and merge like their first cousins getting married. Investors, including Peter Thiel's Founders Fund, have been worried for years, and now he's about to take this company public so we can all add to the piggy bank. Let's dig in, shall we? The pattern goes back to 2008, according to the investigation. Back then, Tesla was about to go under during the financial crisis. Musk borrows $20 million from SpaceX to keep it alive. He said he paid it back. Sure. Fast forward to 2018, Musk needs $100 million. He doesn't call a bank, he calls SpaceX, the bank of SpaceX. Over the next 3 years, he borrows a total of $500 million from his own company at interest rates ranging from 1% to 3%. For context, banks were charging their best customers closer to 5%. He pledged SpaceX shares as collateral on his loan from SpaceX. He got a 10-year repayment window. If he'd borrowed at 4% from a bank, he'd have owed $40 million in interest, but he paid $14 million, and SpaceX shareholders covered the discount. At a public company, this would be illegal. There's a law called Sarbanes-Oxley, which was passed after Enron collapsed, partly because executives were borrowing from the company. It prohibits public companies from lending money to senior executives, like what happened here. But SpaceX is private, so there's no disclosure, no shareholder votes, no one watching for now. Then there was SolarCity. Musk's cousins founded it. It was losing money. It was drowning in $1.4 billion of debt. In 2015, SpaceX bought $255 million of SolarCity's debt that credit agencies said had a high risk of default. SpaceX's own internal rules prohibited the purchase. Musk said that there were, quote, exceptions. He never said what they were specifically. Clearly, this was one. If SolarCity had gone bankrupt, SpaceX's $255 million vanishes. But instead, Tesla conveniently acquired SolarCity in 2016 for $2.6 billion. A Delaware judge said that Musk had been more involved in the process than a conflicted fiduciary should be. But that's in the past. Last month, Musk said his AI company was not built right. 7 co-founders left. Grok can't compete with Claude or GPT for coding. In February, SpaceX bought xAI. The investor Founders Fund was worried because the deal diluted their stake. A pension fund had already sued Tesla over Musk diverting NVIDIA chips to xAI. There are backdoors all around between his companies. The suit asked, could the CEO of Coca-Cola loyally start a competing soft drink company on the side, then divert the scarce ingredients? The court said, of course not. And these days, AI is a slightly bigger deal than soda. Musk himself once described the financial connections between his companies by saying that he didn't want some sort of, quote, house of cards that crumbles if one element falters. He later tried to walk that back. But for what it's worth, you probably shouldn't describe your own business empire as a house of cards and then try to take the biggest piece of it public. So it's clear that SpaceX is Musk's own personal Disney World. He enjoys taking rides for free whenever he wants. But SpaceX is about to IPO. And when it does, Musk has to disclose every transaction between SpaceX and his other companies. The $500 million in below market loans, $255 million bailout that broke SpaceX's own rules, the xAI deal that diluted investors. Wall Street has been valuing SpaceX at over $1 trillion based on rockets and Starlink. The S1, however, is going to show them that it's also been a personal bank, a bailout fund, and a landing pad for Musk's companies that don't work. It really is the company that does it all.